What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is October 8th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to not only dive into Bitcoin's price action, as I think we're starting to see a lot about where its trend direction is going, but outside of that as well, I do want to spend some time to analyze some crypto price action we haven't really covered in a long period of time here in this channel, and of course spend some time to talk about the macro perspective of what's going on, and more specifically, what it is going to mean for financial markets here and energy prices over the next couple of weeks and months. We've got a lot to unpack here in today's video, so if you guys happen to like the video, consider dropping a like. It's one of the greatest ways to support the channel, and let's go ahead and kick off the rambling. Alright, I want to go ahead, spend some time here to focus in on crypto markets first, as we have seen Bitcoin moving up here since September. One thing that I do want to note here is that we are continuing to sit sideways here throughout the majority of October so far, as we've continued to face resistance at a lower level of 28,500. This was clearly the prior support range back here in August, and was prior resistance back here during the period of March, with a failed attempt at support here in May. So this range does have significance here. Again, any kind of $500, $1,000, $5,000, $10,000 interval for price is going to be a big deal that we need to watch for from a TA perspective. But I just want to signify here, guys, that while we haven't really seen much here, and this isn't a make or break thing for Bitcoin, what I want to signify is important to understand is that the more Bitcoin stays here in this range, not making new highs and continuing to chop sideways since back really as far back as March of this year. So we're talking about well over 6 months here now of price action that's just been sitting sideways without any real trend direction. The more it's starting to look like the failed first relief rally in 2018-2019, albeit with a much weaker degree of performance. Last time around we saw 342%, a lot of conviction and excitement, much more liquidations, whereas if we take it from the absolute low to the absolute top, coming from those lows down in November of 2022, towards maybe even here in July, we'll be nice and generous here, even though really I think it was back here, we roughly saw a 105% move in price. Nothing too exciting here. And again, it could be very well a signal here that as liquidity is not on our side, Bitcoin may not be the best performing asset over the next year or so, so long as central banks cannot just print at a whim and lower interest rates like they used to in the past. That's the key dynamic I want you guys to take away here. And we see this being echoed across the board in other crypto assets. It's not me being bearish on Bitcoin, right? Bitcoin is probably the most resilient play in this market by and large across the majority of cryptos. We can see from the absolute high here in December 2021 for the ETH to BTC ratio, we are still tracking down here a total of around 33%, and it looks like we're very well on our way towards the range we have talked about time and time again, coming down here to the fall and getting that full 40% correction for the ETH to BTC ratio. We've been remaining in cash, it's paid for us so far here, and we think we're likely going to get that chance not only to buy ETH at a discount against Bitcoin, but that Bitcoin will properly correct here in the near coming weeks and months. Outside of that as well, we're going to take a look at a chart we haven't discussed in a while. Now usually when we analyze altcoin markets, we usually take a look at total 2, which is excluding Bitcoin's market cap, so it's the entire crypto market cap minus Bitcoin. But we usually take out stablecoin liquidity, and we usually take out ETH. But I wanted to bring your attention here actually towards total 2, because I think that there's a fair reason to analyze this too. So this is really everything excluding Bitcoin. So you're talking about a $500 billion, $523 billion market cap here. Now there's something really interesting here since back in really January, not so much March, whereas Bitcoin really started to kind of stall its trend acceleration in March. The broader altcoin space, or crypto market as a whole, including stablecoins, ETH, and all your favorite altcoins, have really been stagnant since January. And if anything, have started to signal a clear set of price trends. Lower highs since back in April as we were having an expanding funnel here, right? So we essentially came up here to the relative high, 660 billion. We've set in lower highs each and every time, so less follow through here on price when buyers do show up to the plate. And on top of that, for the bulls here, we do have a clear range of current support at a big even level of $500 billion. That's generally where buyers came in here in March. It's where they came in here in June. It's where they came in August, in September, and that has generally been a range of support. Again, contrary to where we saw resistance, back in November and December of 2022. This was also prior support if we take a look back in history in September and October of 2022, and was an important range of contestment back here in June. So generally speaking, this big even range of $500 billion in market cap is where a lot of investors are starting to feel, at least we're seeing within price, that this is a favorable risk-reward profile for crypto. So we're going to have to see if that level will continue to hold. I got to tell you guys though, while it has been holding here, it's been rock solid support throughout all of 2023, I'd say to be cautious here because the buy side response here is getting weaker and weaker and weaker and weaker every single time we come to this price range. It's taking longer for price to start moving higher, and it's not moving up as much as it used to. That's the biggest takeaway here. Whether you're bullish or bearish, you've got to analyze that, and you have to see whether or not bulls are not only just buying during capitulation, providing that bid side support, but outside of that as well, we need to have the market order flow. That's what actually kicks off new bull markets, as we've echoed time and time again here on this channel. So just want to drive that point home here, guys. That's it for kind of the core crypto analysis, but I do want to tie crypto back into the broader macro conversation here. Over the last 48 hours or so, there have been the terrible events going on in Israel, and my condolences go out to all those who were affected. I don't want to spend so much time here today, though, to speak as if I'm an expert on the topic and how it's going to unfold here. And besides that, to be completely honest, guys, as much as this is a terrible event here, this one-off event isn't just going to completely collapse financial markets. That being realized here, while I don't want to spend some time to talk about why this event is good for Bitcoin, I hate people who make those kind of narratives here that, oh, this is good for Bitcoin, this is good for crypto. Really, I'm not going to be here to make those kind of arguments, nor am I going to say that it's a bad thing for crypto. At the end of the day, guys, this is a very big tragedy that's going on, but I want to talk about where this really could have some sizable impact here, or at least be a sign of serious changes in the times to come, essentially of growing global uncertainty. If COVID, the Russia-Ukraine war, all of these global conflicts weren't enough to signal it to you, we are entering into a period of time where global supply chains are going to be continuously disrupted. You are going to have continued imbalances in the economy. There are continuous issues and geopolitical tensions that are going to continue to brew over the next few years. And we need to understand here that this is one of many events in a longer-term, decade-long trend shift from the last decade, the secular bull run that we saw, a period of low-cost commodities, great increase in global trade and global cooperation, and generally speaking, an overall period of time where things were generally moving smoothly. We are now going in towards a period of time where all those things that built up over the last decade, while technological innovations, and I think the standard of living definitely has still improved, we have a lot of issues brewing here. And one of the big things here is a growing uncertainty around the supply-demand balance in commodities. We have had a lot of volatile moves here just in the past few days. A huge decline here from around $95 a barrel in oil down towards a relative low of $82 a barrel, really cutting out here all the acceleration in August and September. Yet just here after the news yesterday, seeing a bottom to top acceleration of 7% here, albeit just around a 3.4% increase from open to close here on the trading days for the futures in oil. But my main point here is that it's not just oil here, it's going to be a cascade of commodities here. Oil, natural gas, we wrote about natural gas accelerating here towards closing this gap for multiple months in the Dash report here, and it looks like it's playing out. Again, we didn't know that this was going to happen between Israel and Palestine, that these attacks were going to happen. But the thing is, at the end of the day, the charts will let you know something is going to give here. Something's going to be the catalyst or narrative for things like this to happen. And this is going to be a re-acceleration in inflation. It's going to be higher utility costs, as in the United States and Canada, a lot of Western economies, we go into the winter, and you're going to see those energy prices continue to accelerate here. It's not me being a doomer or me being bearish or perhaps trying to be some perma-bear and find reasons to be, scared of things. And I'm not here to cause FUD or unnecessary confusion and concern. My reason here for pointing these things out is to let you guys know here, as we've been saying for the past year, more than a year now, it is time to batten down the hatches. It's time to preserve and protect your capital. It's time to tap into a lot of the yields you can get so you can hedge against that inflation so that you can actually protect your purchasing power rather than going out there and trying to speculate on random financial assets, especially altcoins. I mean, again, just take a look here at the chart, guys. You don't need me to tell you this. This is not a bull market trend. Zoom out here. If anything, we better hope that if we take a look at total 2, that we're forming potentially an accumulation channel here, if you want to make that narrative. But I got to tell you guys, that doesn't look like an accumulation channel to me. This looks like it's coming down to lower levels. Right? Again, I'm not here to say that this direct conflict going on is a reason to be bearish on crypto. What I'm saying here is that we're entering into a period of time where liquidity is not on our side. Yields continue to move higher here. What looked like it might have been the psychological top at 5% on the US 30-year yield might just continue ripping higher here. As we talked about again, this has probably got a long way to go. We've said this for all of 2023, and a lot of market participants wanted to believe in a soft landing narrative. They wanted to believe that we were going to be somehow able to avoid a recession. Guys, very rarely in history have we not only avoided recessions when there are yield curve inversions so severe as the one we've had recently, but when you're going through significant liquidity contraction, not just a pause on quantitative easing, the printing of new money, and maintaining lower interest rates. No, we are having multi-decade high interest rates and high treasury yields and government bond yields across the globe. You are having some of the highest savings account rates in the world. And on top of that as well, to top it all off here, you've got liquidity contraction through actively removing money from the money supply. That is going to cripple assets. And it may not happen overnight, it may not happen over a week, and it may feel like, as you take a look across the economy, it's like, is there really going to be a recession, Nick? I keep, feeling like maybe things are a bit slower, maybe things are a bit more difficult with inflation, but are we really going to have a recession? Unfortunately, people in that kind of period of time that I would say is almost like it's almost like recession limbo, where you're only starting to see a few initial weakness signs. Maybe you're seeing tighter interest rates. People think, oh, but is it really going to be that bad? It is going to get that bad, guys. It is going to get there. And we are starting to see that as credit card debt is being maxed out, even with the heightened interest rates that we have going on at the moment. We have it again through an increase and reacceleration in commodity prices. It's showing here that the Fed has not done enough, that central banks have not done enough to tighten the monetary supply. We've got to cripple demand, and the only way that's going to happen is either one of two ways, either a bad scenario or a worse scenario. That is a recession or depression. It is the only way we are going to get back to some degree of equilibrium here. It's the only way we got out of the consistent multi-wave period of time in the 70s of a decade of heightened inflation with higher lows and higher highs. And if the Fed and central banks do this right, they address it here in the near term, we can have the least damaging scenario here, which is just a short-term recession. Right? A short-term window of time where we see a correction in equities, where we see a cool down, and hopefully with that can hopefully bring the global economy towards a degree of much more calmness here over the next few months and years, hopefully lower geopolitical tensions here and really set the tone for a slower economy here in the near term with, again, a reacceleration higher here over the next decade or so. That would be wonderful. It would be great if we could get the pain over with in the near term and have a period of time where inflation is brought back to moderation, everyday people can actually afford the cost of living, and we have better equilibrium in the economy. But again, who knows if that's going to happen, guys? I got to tell you, though, bond markets are signaling that the Fed is doing the right thing here and is likely going to continue holding interest rates high and continue accelerating them higher. And if you guys want to be able to survive this market, if you want to look beyond just investing in cryptocurrencies as an asset class, if you don't want to be simply 100% exposed to Bitcoin as an asset with all of your life savings in such an uncertain environment where Bitcoin may not even in a risk-on environment, may not even be the market leader. That is something you've got to accept here, guys, as investors. I know you guys may listen to a whole range of different people out there, some who are way more optimistic than us, some who may be even more bearish than us. Whoever you listen to, if you take one thing from me, guys, know that at the end of the day, cryptocurrencies are not by any means guaranteed just to go up because of their fixed supply. There needs to be more demand, more buy-side demand than supply on the market. And right now, price action is telling us that there's not an overwhelming amount of demand here. You would see it in price action, and you would see it responding to these geopolitical events if Bitcoin really was winning out here in this uncertain environment. My opinion is that Bitcoin is a money debasement hedge. When money supply is increased, Bitcoin is generally going to respond. We saw that in 2020. We saw that over the last decade after QE injection after QE injection as Bitcoin was born back between 2008 and 2009. So keep that in mind here. As we go into a period of time where the Fed and other central banks cannot just print at a whim, you've got to be prepared and look towards other markets. That's why I'd ask if you guys are interested to check out our newsletter here on the DataDash channel, which is known as the Dash Report. We do a 20-page plus report. We cover not only, in this case, cryptocurrency markets, but we cover stocks, commodities, and Forex. We give a 360 view on everything going on in financial markets. Our red-blue momentum indicator is accessible to anyone within the Dashboard community. You guys can get access as well towards our trade alerts, the Dashboard discussion group. You guys will get access to exclusive market updates. We have a mid-month webinar, which should be coming up here in about a week or so, where we're going to be diving into your questions. I'll be giving a broad analysis of the market, just kind of mid-month update. But we also dive into the questions in the charts that you guys want to review, and so much more here. It's less than a cup of coffee a day, much less than a cup of Starbucks coffee. It's just less than $1 a day. If you guys sign up on an annualized basis, you can save 20%. But generally speaking, it's a great way to support the content here on the channel and get another 25-33% on top of the free stuff that we share here, which includes a lot of our activities in the market and what we're looking forward to abroad outside of just crypto. There is a lot to unpack here, guys, going across the world, and I think it's a time to start paying attention here. It's time to start gathering that information if you are planning to trade or invest in these markets. Because if you're not, I'll be honest with you guys, simply look at a savings account and treasury yields right now, right? I would say you can DCA a little bit into Bitcoin, get some exposure there, but we're not feeling any FOMO here, guys. Right? We got out back in August of 2022 for a reason. Tides are shifting, and this is not going to be a mere, 30% correction in equities like we saw during this period of time from January 2022 to October 2022. No, we're entering into a period of time where there is global uncertainty, and that global uncertainty is not going away anytime soon. And it certainly isn't going to be something that fuels hundreds of billions, if not trillions of dollars into Bitcoin right now. I mean, we've had a year and a half test case for that. We've had global wars going on. We've had continued contraction of the balance sheet with yields moving higher. Bitcoin should be seeing some massive acceleration now. It isn't. And that's just the bloody truth here that we've got to focus on. So I don't mean to laugh about it, guys. What I think, though, is there's a bit of arrogance here by expecting that crypto is just going to respond to this and ignoring the past year and a half of bearish activity that we've been seeing going across the world and the weakness in Bitcoin's price, the inability to form a long-term significant trend to the upside here in Bitcoin's price. Just because we moved off of those lows in December doesn't mean that we are confirmed to be in a bull market. We got to get past that, guys. We've got to be more mature than that. Anyways, I respect everyone's opinion at the end of the day, guys. Just sharing my own here. You come here for a direct opinion. You don't come here for me to say it could go up, could go down. We have our levels we're watching. Sure, we like to keep neutral on some things, but I got to be honest with you guys. If you're asking for my opinion, we're staying away from crypto still. But if you guys like this video, whether you agree or disagree, I ask that you consider dropping a like. It's a great way to support the free content we put out here on this channel. But until the next video, I'll see you guys in the next one on Wednesday at 6 a.m. Eastern Standard Time. Take care, everyone, and I'll see you all soon.